On to business then. Stephen is joining us on set. He's starting today with the price of oil. It's actually jumped after the latest meeting of oil producers cartel OPEC, hasn't it?
The price of crude oil on the market's hitting its highest level in 2 years after OPEC and its allies say they expect demand to increase. The group of oil producers, led by Saudi Arabia and Russia, moved to gradually increase production in stages until July, partly reversing the dramatic cuts they made in the past year. On the markets, Brent crude and WTI both rallied sharply. They're holding on to those gains today, both up by about 0.5%. Under this plan, production levels will still remain lower than before the pandemic. Peter O'Brien has more.
They're sticking to the plan. OPEC Plus, the 23-country group comprised of the oil producers cartel and its allies, will continue gradually increasing supply after they slowly began opening the taps in early May. It didn't take them long to decide. At the meeting, which lasted less than half an hour, the Saudi energy minister said demand had shown clear signs of improvement.
We're collectively, the 23 countries, and I mean even Iran, are in our comfort zone to make that decision. And this decision was actually voted unanimously.
By next month, global output should be 2 million barrels a day greater than in April. During the pandemic last year, oil demand slowed and producer countries made drastic cuts to support prices. Now, prices have surged to the highest levels in years, and suppliers must judge how much additional oil the market needs. Recoveries from the pandemic are expected to drive demand higher, but many countries are still battling the virus, so the future is still uncertain. Complicating estimates is the possible return to the market of more Iranian oil, which will depend on the outcome of talks over Iran's nuclear program.
The White House, meanwhile, has stopped planned drilling for oil in Alaska's Arctic wildlife refuge. Several licenses to explore for oil and gas were handed out in the final days of the Trump presidency, but the Biden administration announced they were suspending those permits pending an environmental review. Indigenous groups had alleged the licenses violated federal law for failing to properly consider the impact on wildlife and native communities.
Now, the European Union has agreed to new tax rules for big multinational companies.
Member States and European Parliament negotiators have reached a deal to boost tax transparency in the EU. It means that multinational companies with annual revenues of more than 750 million euros will now have to declare how many employees they have, how much profit they make, and how much tax they pay in each EU member state. On top of that, they'll also need to report details for countries on the EU's tax haven list. This country-by-country reporting rules will now need to be voted on by MEPs and national leaders at the European Council. The plan has been criticised, though, by Oxfam for not going far enough.
Australia for this next story. The economy there is bouncing back, isn't it?
Economic growth was faster than expected in the first 3 months of the year as consumers started spending some of their COVID savings and companies invested more. The Australian economy grew by 1.8% between January and March, down from 3% in the last 3 months of 2020. Now, compared to last year, the economy is 1.1% bigger. Australia has escaped much of the economic slump seen in other places thanks to its efforts to control the spread of COVID-19. It's one of only 6 countries in the world whose economies have grown during the past year. But economists say the sluggish rollout of vaccines there may hamper stronger growth in the future.
Markets now then, Stephen, what's happening?
European shares starting the day up, although not by very much. Oil companies are seeing some gains as we've seen oil prices rise. Shares in the low-cost airline Wizz Air, they're up and they're listing in London. That's despite reporting losses, of 482 million euros for the past year. It was a mixed picture in Asian trading earlier. A survey of Chinese manufacturers showing weaker growth weighing on investors' minds. Shanghai and Hong Kong in the red there. Tokyo and Seoul seeing some gains.
And finally from Stephen, Amazon has announced some changes. This is to its recruitment practices.
The e-commerce giant says it will stop testing job applicants for marijuana use. This after a man in New York sued the company in March, saying Amazon had withdrawn its job offer at a warehouse after he tested positive. That's despite a ban on such tests in New York City. In a blog post, the company says it will still test workers for other drugs and that it would now support the federal legalization of marijuana.
It's lucky they don't do that here, isn't it?
Is it? Tell me more, Stuart.
How do you think we managed to do this programme where we all get up at 2 or 3 in the morning?
That's why we're all having so much fun.
Exactly, that's what it is. Stephen Carroll with Business on France 24. He's going to keep smiling, in fact, for this top story from Alison.